I'm struggling to sign in my different PC and taking time. So I'm very sorry for not in time. So I give you today's presentation for Japanese stock strategy, equity strategy for the third quarter of 2023 at 2024. But as for this presentation, I don't make the strategy updates because the market is really changing, but so fundamental change is not occurred. It's about and also some industry perspective is almost same, but some market environment is different, changing. So I'm focusing on what happening, descriptive and analysis for what's happening in Japanese market and also for macroeconomics. And some, okay, let's start the slideshows and also give you, sorry, wait a moment. Here, okay, let's start to this station, okay. Okay, so they're talking about how the Japanese yen is moved towards, and you can see that this is the last 12 months movement of the Japanese yen against the USD and Singapore dollar. It's apparently weakening, and uh, in the last year July, it was 144.5 USD, but it's turned out to be 144.5 JPY. It turned out to be 160 JPY against the USD. So why this weakening occurs is apparently by monetary policy. So so we're talking about what the fundamental of the macroeconomics changed so far. This is the output gap counted by the BOJ, and this is because this is the output gap. If the output gap positive, the demand exceed the output or supply, and if negative, supply exceed the output, supply exceed the demand. We see that in this from the 2020 after the corona, it turned out to be a supply gap. Supply exceed the out demand, but it is shrinking. Then it's almost zero, but it turned out to be a slightly turned to be a negative output gap. It's been a supply exceeding. So this is because our inflation is considered to be because of the USD currency change, not because their consumption increases rather than supply increase. Sorry, this is so. This is also about the fundamental of the macroeconomics. This is the gross accounting by the BOJ, and this is about how the GDP growth is explained by the factors of the capital and employees work, and also TFP is a total factor productivity this is residual, not explained by both of the capital and employees increase. So the residual is considered to be the factor technological change occurred because of the effort of the company or the effort of the research and development by the public sector and private sectors. we see that this blue one is positive, but not strong. But with constant, it is constantly constant rate in the last quarters, six last half of the months, half of years, and potential growth rate also tend to be positive for recent years. So we're talking about what the Japanese and what the Japan USD policy is different. The monetary condition is USD is apparently tightening, but Japan is turned out to be tightening, relatively tight, but absolutely in easing case. Policy rate is not high. Sorry, this is different. It keep low, but the USD is keeping high, but it's possibly suggesting the policy rate cutting, but it's still keeping high. The quantitative control is turned out to be tightening, but in Japan, still expansionary, but suggesting a slowdown. Exchange rate is not controlling in US way. For way in Japan, there's several interventions to recover the JPY price level. Fiscal constraint is both expansionary, but expenditure for the public investment is slightly declining in both USA and Japan. And taxation, USA is a mixed case, but Japan is reducing. And from June, the fixed amount of the income tax for the household and for residential tax reduction for the household were both enforced, and we gain maximum 40,000 tax reduction and affordable for consumption for next 12 months. This may may increase the consumption, but it's also possible that making it more inflation severe. So both in case inflation is both an inflation condition. The price index is 2.3% YOY increase in Japan, and month-on-month change is 0.3% increase. In USA, it's more increasing in year-on-year increase of 3.3%, month-on-month minus negative 0.1%. This shows USA might turn to be a moderate inflationary phase, but it may happen that it's possible to turn to be a more positive inflationary condition. That's why US is still policy rate high and reluctant to cutting inflation policy rates. The price index PCE is also 2.6%, and the tendency is increasing but slow down. But Japan is constantly increasing. So we're talking about the index and sector reviews. So we see that Nikkei 2.25 and topics are both record highest. It's the end of the topics is for tough to record high since December 1989, and Nikkei 225 is also tough to the record high in and will also increase price increasing in the ongoing price record high. So why the Nikkei topics are different? So we go to the next slide. I'm sorry. This is return on indexes. We compare the index performance of the last 12 months quarters. So we see that in the in the second quarter of 2024, average return on Nikkei 225 was negative. Even though the first quarter of 2024 was 90.02%, it's higher than the topics and the other S&P and the STI and Sharpe ratio, but it turned out to be moderate in the second quarters. And see that the S&P is the most risk return efficient figures. The second best is 142% Sharpe ratio of topics that core 30. Core 30 means the 30 largest cap in the considered topics. We see if we translate this Japanese index into US dollar term, it's more different results. We see that this is annualized risk, and this is average last 244 business days return was like that. It's S&P is the largest, but topics core 30 is different. Is the second largest return, and topics and Nikkei was single digit, turned out to be single digit return in the USD term. And Sharpe ratio is also inefficient, less than 1.0, even though S&P is the highest 12-month return and most efficient Sharpe ratios. And risk also mitigated, rather than risk is most robust than the topics and topic score. We see that the currency is really effective and making our Japanese stock underperform rather than USA. Let's move to this is the USD dollar denominated indexes. It's normalized by the S&P prices. The first day of July was standardized at the price of the S&P 500 at July 2023, and then S&P is the most highest prices, and next was the topic 30. Why topic 30? C30 is the most performing because a lot of the capital are go to the large cap of the Japanese stock. So I have to explain why the Nikkei topics are so different. This also again I was talking in the last quarter, and see that this is the first returning is most highest weight in the Nikkei 225. This is maybe you know that Uniqlo is the brand of the fast retailing company, fast retailing, and it's also 10%. Tokyo Electron 8.65%. In the first quarter of 2024, it was the winner picking. It's like a winner picking. But in the negative, in the second quarter, these stock are not performing well. And also the YTD return is 72%, but in 2 quarters, SoftBank is turned out to be only 50.19%. Okay, we can see that its index composition was completely different from the Nikkei and topics. And I see that the topic is the most fairest index in comparing the Japanese stock. Let's move to the next one. How sectors constitution to topics. This is the electric appliance pricing instrument. This is the sector that contains the vendor of the devices for constructing or producing the semiconductor chips. And IT and services and other is also included as SoftBank and ARMS. Automobile transportation going to the third one, and bank is surprisingly the fourth one. It was non-performing and not performing well in the last quarters, but it's turned out to be the biggest in the not performing well in the last years, but it's turned out to be a very performing. The sector performance of the fourth quarter was that, this is the most performing was the bank, finance, exclude non-bank sectors, and the bank, and electric, power, and gas. This is the recovery from the unperforming in the electric, gas, power, and gas. And the bank and non-bank was because of the policy change of the Bank of Japan and problem for a more perspective for interest increase and also tightening comes from the quantitative easing because also affect well for these sectors because the bank if the bank holds the JGB for their increasing their yield, but it was purchased by the BOJ and it is deposited to the negative interest rate applied bank reserves. But negative interest rate policy is abandoned and also JGB increased because of expansionary monetary policy and purchase a more repriced JGB with higher yield. The bank is getting bank perspective for the year increase. I will discuss later for these matters. Sorry, I did the worst performer. I didn't properly write this worst performer in the second quarter. This is almost same. Sorry, I will correct it in the distribution. Let's move to the second one. So sector performance in last 12 months is total performance. The highest return was energy resources. It may because of the recovery from the corona and also because of the energy consumption increase because of the AI and data centers and financial for excluding banks is also uh, uh, good supported by the BOJ policy change and also consumption increase. Electric gas and power is also increased because of the data center energy demand for the data centers. Commercial and wholesale trade is increased because of the increase of dividend and also the Tokyo Exchange directives for improving the book price book value ratio for Japanese companies. Lowest return was transportation logistics because of scarcity of the human resources, and pharmaceuticals is also the negative rebound from the coronavirus, and the food is also not bad performing. Retail trade is also scarce. It's also less performing, but it's still 11%. It's maybe average. The highest risk was the energy resources. Electric gas is also very highest risk. Bank also, because the bank is always bank is relatively stable in normal cases, but because of price appreciation, it's turned out to be a riskier than other sectors. Lowest risk was the food and retail trade. IT and services, the other is also including some retail trade, retail store on the IT services. So there's a similar, risk perspective, risk characters. Raw material and chemicals also second and third lowest. So the highest Sharpe ratio was financial and banks. Energy resources also a higher Sharpe ratio. Lowest Sharpe ratio was like latest underperforming of the underperforming sectors. Let's move to the next one. Oh, sorry, this is. So we have to talking about the Japan large cap performance. I choose this is the 12 largest stocks, largest stock of the from the topic composed topics. And this is the topic performance topics was like is a gray one, and the red one is Tokyo Electron. Then so the topics performance sorry, the topics performance is this one. Sorry for sorry for the mischoice of the color of those lines. So this gray one, lighter gray one is a Recruit Holdings, and this is topics. We see that more than half of the largest cap is performing better than topics, and there are some of the Sony, NTT, and the key ends. Only 3 companies are less than the topic, less performing than topics. Let's go to the large cap fundamentals. So in the US term, largest cap is Microsoft, Apple's, Nvidia, like that. There are also some exception like Netflix and Amazon in efficiency of this company. The exception, and most of the large cap in the US is capital efficient companies. But in Japan, the inefficiency can found on both ROE and ROIC. The Toyota is the largest company in Japan, but its PBR is surprisingly low. It was improving than under 1.0 from the last from the 2 years ago, and ROE is improving because 50.8%, but ROIC is surprisingly low by 5.8%. This is less than the capital cost. Equally, the return of the from equity holders and bond holders, it was weighted average cost of the capital is 8.1%, and this is less than the ROIC is less than the weighted average cost of capital, so the spread is negative. This negative shows the long-term capital return of these companies, investing in these companies. MUFG, it's a Mitsubishi UFJ Financial Group, is the largest banking sector, the financial company of the Japan. Is also spread is low. Why I not to choose the largest cap in the strategy portfolios and see weak in Japanese yen has greatly okay, and then so only exception was Tokyo Electron, Recruit Holdings, and NTT, but NTT year to date return is negative. So let's move to its sectors. Automotive sector performance. Automotive sector performance is total is above the topic set performance, and Suzuki also performing well. And this is this beige line is topics automotive sector and automotive and the exportation equipment sectors, and also Nissan and Mitsubishi was lower than the both index and also under the topics. So what's these fundamentals? Toyota is also a negative ROIC spread, and most of the companies are less PBR is around 1.0, and the Mazda and Nissan is under 1.0. It's like uh, selling the wallet that have the 400 yen for that hold of 100 yen and selling it to the 1,000 yen. It's like that. And Mazda Isuzu. Isuzu is the subsidiary of the Toyota. Uh, I'm sorry, sorry, it's not Subaru. Sorry, it's mistake. The Subaru is subsidiary of Toyota, and it's almost same. YTD return is very strong in the Toyota, Honda, Suzuki, and Subarus. And Subaru is free of the fraud of the test inspection of the automobile that happened in the last quarters of this year's. Let's move to the so Toyota's sales is surprisingly increasing. So the year-to-year increase was almost for 21% in year-on-year increase. So the Toyota's strong performance is driven by the sales increase and also by the shareholder return. The strength and the share repurchases and also increase its dividend. Sorry, I don't add the slides for this, and I will add the slides in the distribution. So, but for more comment about the Toyotas, they also try to improve the asset efficiency and changing the cross holdings, also cross holding policy of the some suppliers. One of the suppliers is Renesas, Rome, and Renesas, Rome, and Denso are cross holding each other, but they dispose Toyota selling some portion of them, and then Renesas and Denso and Rome, they can have more provision for shareholder returns. I think that they are more efficient. The research can be more efficient than Toyota, and why I added the strategy portfolio in last quarter. And move to the telecommunication sector performance. The Rakuten is originally a internet retail company, but is going to enter into the mobile company. Why is so performing well? Because the mobile segment is non-profit making and dragging putting the legs because of the negative earnings, negative incomes. But there's some perspective improves and for some perspective about going to the positive income. So that's why the Rakuten increased performed well in the last 12 months, but Rakuten is still in the negative income and negative income. And SoftBank, we have two SoftBank names. The SoftBank Group is the holding company that having the investment holdings for the arms and other venture capitals. And SoftBank was ordinary business of the mobile communications, and this was a subsidiary of the SoftBank Group, but it is listed independently in the in history. So the NTT is surprisingly underperforming from the average of these topics this sector. Let's move to the next one. The sector fundamentals is like that. SoftBank Group is negative ROE because of their some loss because of the loss of the investments, and its net income was also negative. But the provision for increase because of the price appreciation of the arm in the UK, and NTT was the third best ROE, but it was YTD return is negative. SoftBank Group, this mobile communication is better ROE than SoftBank, and Rakuten ROE of Rakuten is apparently negative because of the negative income of the because of negative income. So, but from the perspective of the improvement of the mobile sector, it was highest YTD return. But comment about the NTT, they said there can be a strong performance, but it's there's a conglomerate discount. Segment performance weak with single-digit margin and growth is also stagnant. If you invest in the silicon photonics technology, the NTT enter into the coalition with Intel for the new technology of silicon photonics. This is extending the connection of the GPU or the CPU into the signals by the right, and it can be energy efficient and also higher speed, and the energy consuming and efficiencies, transmission efficiencies. But in these areas, Intel is a leading company for interconnecting CPUs in the right signal, and Broadcom is also a good. It's also some XPUs or some where integration of the heterogeneous integration of the interface of the connectors into the interposer of the silicons. It is first. It is almost 51 terabyte flops per second. Its transmission is more efficient, and Synopsys is acquired the ANSYS, and ANSYS is the inspection and testing and tool for the silicon photonics chips, and they are also leading companies for this technology. The better for efficiency, scale, and growth in the for investing in the stocks. So I cannot say that the NTT is a recommended company to invest. So let's talk about ARM and SoftBank. ARM acquired by SoftBank Group and delisted once in 2016 and go public again on September 30th, 2023. Acquired in the 3.3 trillion JPY and turned out to be 24.6%. It's near to the 10 times doubling, and also equity IR internal rate of return is 3.4%, 34%. SoftBank still hold 90% of ARM stock. It's equivalent to the 47% of total equity portfolio of SoftBank Group. So the price difference, price change is like that. We translate SoftBank in the US dollar term, it's a rated price rate to the ARM holdings from the inception of the listing. I omit the first day of the listing, 90, and start from the September 40th because there's a pricing inefficiency in the first day of the listing. So there's looks like a co-movement, but ARM is increased and decreased too much because of the perspective for the artificial intelligence. So how should we So which arm and SoftBank should we invest, and or how portion of our wealth invest in the SoftBank, and how much to the arm? This may be the answer for 70%, 30% is most efficient. We see that the daily average return is 0.28% of SoftBank, and ARM is almost double of this. And daily risk is also 2.36%, and this and also almost double of the ARM is almost double of the SoftBank risk, and correlation is 0.35. It's less correlated each other, but if try to make the portfolio combined risk return relation model combined risk and returns, it's 104%, and ARM 100% ARM is looks like that. So if there are more sorry, how to explain. I cannot see that almost this is almost straight line, but it's slightly concave, but we cannot see. So we cannot say the more if it were concave, we can more steeper concavity, you can see more efficient points can be found, but it looks sound like a more concave. But it means that if you invest in the 100% of your wealth in the SoftBank, it's 0.28% return with lowest risk. If you invest in 100% ARM, it is daily return of 0.49 at 0.4987%, but their risk is almost highest with 4.98%, 97%. So let's move to the banking sector price change. Banking sector is more so is the most price appreciated sectors, and find that the topics on risk noise price is somewhat like similar, but the topics is here, and the listener is here. Most of the banking sectors, and this is choose the largest cap of the municipal bank, or also some sort of regional bank like a Chiba Bank, Kyoto Financial Group, and Concordia Financial Group and Kyushu Financial Group for the regional bank in Japan. And JP Bank is the banking by the Japan postal companies, and let's move to their efficiency and fundamentals. Their ROE, their PBR is near to most of them are less than 1. It's similar to the US equivalent JP Morgan Chase, Bank of America, and Wells Fargo. Their PBR are higher than 1.0. It's more efficient, less efficient than the US comparables. And also, but the spread equities, ROIC spread is in a different condition, similar condition. Their ROIC spread of the Japanese banks are negatives, and also the JP Morgan, Bank of America, Wells Fargo also have the lowest the negative ROIC spread. Again, 5.0 ROIC compared to the 6.9 required returns. But ROIC spread is smaller. Negative spread is slightly smaller than the Bank of America and JP Morgan. But as for these inefficient companies, our YTD price return is very high, or double digit, and more than JP Morgan Chase and Bank of America. yield of loans and loan growth. We see that from this figure, how profitable these companies. Some of the banking, MS Trust Holding is SMBC in the and MSFC is SMBC. Sorry, I translation mistake. This is so the average loan yield of these Japanese banks, most of very 3.01 in Mizuho, and MEFD is 3.39%. But for JP Morgan, Bank of America, they are more than 6 and 5%. But loan growth is also smaller than the US comparables. It's single-digit growth. And also by compared to the US, they are just double-digit or more than doubling increase of the loan growth. It's very surprising because Japanese interest rate is low, very low, and people more want to borrow money, but it's not. Even though the highest interest rate increase appears on the US, but the loan growth more than Japan. So we also want to see the interest risk by the held to maturity security. If the bank or business company decided to hold some bond and debt securities. Debt securities. It is not their gain and loss not appears on the income statement. Instead, their loss, not the price difference of the par value and the acquisition price was amortized, and not their unrealized gain and loss not appeared on not affect the profit and loss of the company. But in some cases, it was realized because of the time horizon, or or selling some portion of the held to maturity security, the unrealized gain and loss are realized in this case. So I want to compare these unrealized gain and loss against retained earnings, accumulated net incomes, and recent annual net incomes. So we compare this. Japanese banks, with some exception, 19.1% loss against retained earnings. There's a smaller interest rate risk of the HTM securities. And against net income, there are relatively smaller than the US comparable. We see that Bank of Japan, Wells Fargo, having the unrealized loss of the HTM security against almost 19.7% or 50.6% of the retained earnings. And also net loss against the recent net income is almost 3.6%, almost 4 times, or more than doubling of their recent net incomes. So so I have to say that the Japanese bank taking less risk, also taking less interest rate risk, and also their loan risk, and their capital efficiency is less efficient than the US one, but price appreciation is bigger than the US one, US comparables. I see that in some days the adjustment may occur. not price increase, not the adjustment is not necessarily a price reduction, but their returns are reverting to the means of their capital efficiencies. So so let's move on to the portfolio performance. I show you the some two picked portfolios in last quarter, but and see their performance. I choose this stock. Renesas is a semiconductor in band of a silicon chip and power chip for automobile and also for some data centers. Advantest is the vendor of the devices for production of silicon chip. Zenko Kosho is a protection, selling the protection for the mortgage loans, and Capcom is a gaming company. Anycolor is the talent management of the VTuber. VTuber is the virtual YouTuber with the VTuber. VTuber is some talent with created virtual created icons. Phillip Incorporated is a construction company, but also offers some chemicals and some construction materials for silicon fab. And fifth stream is the pharmaceutical ventures and offering some protein rated protein rated protein rated sorry protein rated with medicine and also for some kind of the food. And since Chemical is the leading company of the silicon ingot and silicon wafers, chemical some materials for silicon wafers, and their price, the end value is totally good, totally almost 7% increase of the total portfolio change. Let's move to the performance measures. The quarterly measure 61 days, the 2Q return was 6.8%, and portfolio risk was 11.9%. Annualized, if it were translated into the annualized measure, it was 23.8%, and return will be 27.4% in cumulative annual return. A Sharpe ratio can to be 1.11. And Topic's return is like that. Portfolio risk is 6.9%, is relatively stable, and quarterly return was 1.4%. And if it were translated into the annualized measure, it's like that. Our portfolio return was better than the Topics. And let's move to the 12-month measures. We extend the backtest of the last 3 quarters, and then including a 12-month measure, 12-month price changes. It looks like 23.8% portfolio risk against the Topics of the 30.9%, and portfolio return is 7.2%, is 70.8%, and Sharpe ratio is less performing than the Topics. So our current return is very currently situation specific and not generalized to the last 12-month situations. Sorry, this is not but so I'm sorry for no well-prepared presentation, but I can say that I have to say I will improving in the distribution of the slides for you, and so read some comments. There the large cap inefficiency still found in the Japanese companies, but the price increase more than their efficiencies because of the because the foreign investor investing more in the large caps. So our investment attitude should be for finding capital efficient stocks and search for the relation to the large caps. Like Renesas and Social Next is one of examples. The Renesas is a holding company of the Toyota, and the efficiency is better than the Toyotas, and also have good provision for the shareholder returns to the stock repurchasing and paying dividend. So this is our strategy. I'll make the strategy update for next quarters and show you more attractive stock. Okay, this is the end of my presentation. Thanks so much. If you have any questions, please post it on the webinars. Please post it in Zoom. Let's move on to the question. And SE Town, weekend JPY have greatly affected CD return. Do you see JCB stepping into support? You mean that the BOJ stepping in Japan support? There are many times I see that. Sorry, wait a moment. Questions? Question Q&A here. Okay, Q&A. Phillip, you mean okay. What is the general public in Japan felt about the depreciation JPY versus USD? Did they spend more due to worrying of the inflation? Well, it's also possible. Yeah, they're worrying about the inflation. We see that more worrying about the USD more depreciation. Yes, we see. The US JPY depreciation must come from the interest difference of the US and Japan, and we perceive that it will continue. The strong USD is still continue, and the Japanese is weakening. We are worrying about inflation, and their tax reduction is also can turn to be the consumption. So it's worrying, yeah. So it's worrying inflation is true, and also more depreciation may happen. Thanks so much for questions. By risk, you mean volatility? Yes, it is standard deviation of the price returns. It's and square root of the variance. So I don't add the technical notes for slides, but if you want, you can see in the textbook of the portfolio theory, and I will try to add it in the distribution slides. Thanks so much. Why the negative spread counter have better returns? Well, this negative return spread will not price it well in the negative spread is because of this negative spread is correlated with the lower book values, and total directive to improve the negative book value are less than one book values. The many investors see that it is possible to improve the efficiencies. So this is increase. So because the better return means better price return means the market perceive that it can be increased in the future. But I'm skeptical about such improvements can occur in every company, every lower book value company. we must see the US comparable and the senior business have how much can earn how much they can earn and how much efficient in these comparable companies. If the comparable low return in the even in the US, Japan similar company also have lower negative spread, also show negative spread or lower efficient return in the futures. Thanks so much for questions. Nikon still have doing well. What is your opinion on the stock for the near future? Any other turnaround counter you recommend? Sorry, I cannot reach this kind of the research, but Nikon doing well because they're going back to the photon uh, what's some advancement the silicon production technology and the perspective because of this perspective it will turn out to be performing well for these days. But this technology is dominated by the ASML in the Dutch company. So I have to be skeptical about this. They can catch up with these companies, this technology. Thanks so much. Any ETF recommend for Japan market? Sorry, I didn't research for much about the ETFs. I will uh, I will try to find out a better ETF for you in the next quarter. Thanks so much. If Trump wins the US election, any effect on Nikkei index? It's possible that the if the Trump wins, the US is turned out to be more expansionary and monetary policy will be turned to be easing. So USD may be weakened and some USD JP maybe is some improving in the future. But this but the Trump but the FRB is more independent than the Japan. So their committee members are against the aggressive cutting of the policy rates. Is this kind of vision this may not happen. Thanks so much. What factor might communicate to go into bear market? Well, there's some I as I show you in the last slides, there's some the Nikkei is like a cherry picking index of the wedding companies, and in the first and in these days, in today, the fast retailing, the most dominant company in the Nikkei 225 is show a spectacular earnings for last quarters, and it's difficult to turn into the bear market in these days. And some may happen that some of the dominating composite company is related to semiconductor industries. If the NVIDIA is turned to be a negative earning, turned to be a less attractive earning result, can be going to bear market, can make Nikkei into a bear market. Thanks so much. Alpha Capcom, sorry, I have to talking about it. Well, this is still positive. There's some sort of the very attractive titles appears on the market. Is still ongoing. Title is still attractive, ongoing, and also it's better performance in the Nintendo in price. So so that's why I not change the portfolio composition in this quarter. Thanks so much. Which company is Warren Buffett still investing in Japan? Yes, trading company like a Mitsubishi Corporation is like that. There's undervalued book. The wholesale company is historically prices under book value companies, and there's a lot of room for shareholder returns like stock repurchasing and dividend. I think that the Warren Buffett still holds these companies, and I also think that the company like Hikari Tsushin holds also hold Warren Buffett. Thanks so much. And any view on Komatsu and Sankyo? Well, Komatsu was Sankyo. Sankyo means Sankyo's Pharmaceuticals. I'm sorry, I not cover these companies where this. I'm sorry, there's a lot of stocks in the market, Japanese market, and I cannot cover all those things. So, but as I covered a lot of companies in this quarters in this stock picks and strategy presentation, I will uh, I will also cover some perspective for the electronics company in the next quarters. Thanks so much for asking. And I see that there's some chat on the okay, most country. And someone asking me in the webinar chat, in SE term, the weakening JPY have greatly affected CD return. Do you see the JP stepping into Japanese JPY? There's several times attempted by the Japanese government to recover the JPY, but it will rebound. It is finally failed. In the last night, the JPY is turned to be a 158 yen, but it will soon recover to the 160 yen JPY in USD. So I think that any intervention was failed in the future, and the price keeping is almost difficult. Uh, so some steps for currency intervention is merely a smoothing the price level. It should be the smoothing. It should be smoothing. So I can. So the level should be determined by the market, and I think that as soon as Japan must decide the interest rate increase or the some step into the construction or the fiscal policy in the future. If we want to keeping the JPY more strong against the USD. Thanks so much for joining us. Yeah, I think that these are I asked all questions. I think so. One against one. Do you think the greatest market risk is rising cost of debt or government with its over 100 GDP debt levels? Do you see the holding down interest rate any longer? Yes, it's possible. Japanese government were discussing with Japanese government, talking a lot with governor of the weather, Kazuo weather, and it's sounds like looks like their pressure of not raising the inflation. We are still in the and it may possible that if the Kester coalition government ends, we have to decide the contraction of the expansion policy and raise the tax reform. Touching the tax reform, it may possible. Thanks so much. And outlook for consumer retail stock like Aeon, Takashimaya fast retailing that is listing JP, but no global reach. I think the fast retailing is global reach, and Takashimaya and the Aeon is a more domestic company. And so the fast retailing is a very attractive returns in these days, but sorry, I didn't cover the Aeon and Takashimaya, but in next quarter, If possible, I can show. I could show you. I wish I could show you the outlook for this company. Thanks so much. If you see dividend from Japanese company improve, will you see? It's default determined by cash collection efficiency and also by capital efficiency. It depends on the companies, but some company holds, as we see that the Japanese bank reluctant to rent compared to the U.S. companies. So the capital efficiency may improve if the banks are more aggressive to rent, and the company can improve efficiency by capturing the debt more. Thanks so much for, sorry. Yes, some exploitation for more take advantage of the debt financing can be a more improvement for the dividends and shareholder return. Thank you so much for asking. Would you like to explain what factor contributes negative output gap, please? Well, this is because maybe because the output gap may happen because people wants to buy less and domestic goods and save for the future. It's maybe a NISA may be one of the factors. What for take the appreciation of the price of the stock, and if the stock price appreciates more than the inflation progress, they try to invest in the stock. And NISA is the account that the tax exemption from this investment account expanded to in this year, and they more invest in rather than consume. It may be because of the negative output gap. Thank you for questions. Okay, I finished all the questions. Thanks. I'm sorry for taking up time.
Thank you, Misumi, for the presentation and interactive Q&A. We have now come to the end of the webinar, and we would like to thank all of you for joining. For the session just now, we would be uploading the recording on PhillipCapital's YouTube channel. You may view the recording of the webinar on your own time. Also, we have many other interesting webinars going on almost every day. You might view our full list of webinars on our website. Do take your time to fill in the survey so we can improve your experience with us in the future. You may scan the QR code on the screen. You may also join our investing communities to get free access to full research reports and discussion on technical analysis. Once again, thank you all for joining us today, and we hope to see you next quarter. Have a great day.